Greetings, and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MAIDSAFE. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 13th of July, 2018. Today I'm soloing the show, so let's begin. Topic number one, the weekly market roundup. So we've got market cap today of around 250 billion. Bitcoin dominance at 43%. Biggest gainers this week. Let's see if there's anything interesting in here. Looks like basic attention token, they're up 22.8. KuCoin shares up 21. 10x up 18.5. And on the loser side, I'm just looking for anything that I know. You know, there's so many coins. Digibyte, they're down 11. That's about all that I'm aware of, coins that I know anyway. Up and down. Let's look at the global charts. Total market cap, we started the week at about 268 billion. And we're ending down 247 billion-ish. So, yeah, been a pretty negative week. Volumes have been up and down, we can see. It's not looking too pretty. We keep having these small bull runs, and then we go right back into the bear territory. Don't like to see that. On to our next item, Blocktivity. We got BitShares number 1, Steam number 2, Ethereum number 3, EOS 4, then Bitcoin, Ethereum Classic, Golos, Litecoin, Doge, Bitcoin Cash, Zcash, Dash, and Monero. Let's have a look here at what's going on with Ethereum. As usual, we're pegged. 21,000 unconfirmed transactions this week. Or sorry, today at the moment, not this week, but that's down significantly over what it was last week. I had over 40,000 on that particular moment in time. EOS continuing to move up. It's doing well. We got the total activity there. We can see. I think I heard someone, maybe it was Ivan on Tech or Chris Coney, I'm not sure, one of them saying that at one point this week EOS actually went over Ethereum in total activity. It's not at the moment, but you can see they're very close here. I'm not sure what kind of activity is going on EOS that makes it so busy compared to Ethereum, but it's certainly interesting to track and watch what's going on there. Alright, our next topic, the MAIDSAFE update. The main things highlighted this week from MAIDSAFE. The key output from the marketing team this week was the release of the Parsec code. If you haven't done so yet, please support the announcement by sharing and giving the Medium article as many claps as you see fit. Well, I gave the Medium article 50 claps myself. That was the maximum that I'm able to do over there. This week, MAIDSAFE finished working on client API changes in the Safe client libraries. The new Safe client libraries version, including all the changes that this pull release, that's referencing a link there, brings, will significantly simplify developing apps for the Safe network in Rust. Rust is, of course, a programming language. Next item, MAIDSAFE has also released a new minor version of Safe Crypto 0.2.0. This brings some new features and breaking changes to improve the API and the quality of the code. Next, as some of you noticed ahead of the official announcement, we completed the final task for Parsec Milestone 1 this week. After the final bug was squashed, we were able to run tens of thousands of tests with random inputs, all successfully reaching consensus in the same order in a small network. And final point, for those of you who like experiencing things with your own bare hands, we wrote up a little tutorial to get started with the Parsec code. going from cloning the repository to generating graphs and visualizing them with your web browser. Feel free to try it out and report any observation you have. I'll just read through the marketing this week. The key output from the marketing team this week was the release of the Parsec code. If you haven't done so yet, please support the announcement by sharing and giving the Medium article as many claps you see fit. As a few people have commented on this, so far, this is the first time that we've gone down the route of having a talking head style video explanation in conjunction with the written text and running the usual social campaigns. To make sure this is as effective as possible, we'd love to hear your feedback. Was it helpful? Could it be better? Would you like to see more of this sort of content in the future? All feedback, good or bad, is gratefully received on this. Yeah, I'll make sure to link the video that Doug Campbell did in the show notes. The next thing here in the marketing, as the rest of the team's focus this week has remained on the other two key projects, preparation for the launch of the new website and heading along to the Decentralized Web Summit. Next week we'll be re-recording the Getting Started video again to deal with the sound issues we faced the first time around. Finally, one last reminder about the Chicago Safe Meetup. If you're looking for a free Safe t-shirt at the event, get in touch with @Sotros25, Sotros25 user on the SafeNet forum. So they've got other bits in here on the user experience and website design, Safe API and apps, deeper dive there, and what's happened this week. Safe client libraries, deeper dive there, and routing and Crust. So, as usual, if you have any interest in what's going on over at MAIDSAFE, please do check out the link in the show notes and go to the update page here on the forum and check it out, read in depth, and learn what's happening over at MAIDSAFE. Our topic 3 this week, as usual, is the news segment. Starting out with a little bit of humor. Ethereum's Vitalik Buterin blasts centralized crypto exchanges, quote, "I hope they burn in hell," end quote. Co-founder of Ethereum, Vitalik Buterin, criticized centralized exchanges, saying that he hopes they will burn in hell in an interview with a TechCrunch journalist, John Evans, on the 6th of July. Buterin has reiterated his positive stance on decentralization, claiming that by developing better decentralized platforms, the crypto community should be able to take away the stupid king-making power from centralized crypto exchanges. The creator of Ethereum criticized centralized platforms for having the ability to decide which cryptocurrencies become big. According to Buterin, they do this by charging, quote, "these crazy $10 to $15 million listing fees," end quote. He then added that further decentralization would better satisfy the blockchain values of openness and transparency. Decentralized exchanges, unlike centralized ones, are built in such a way as to allow users to retain ownership of their cryptocurrencies and private keys. However, DEXs, decentralized exchanges, also have disadvantages, the relative lack of liquidity compared to their centralized counterparts being one of the examples. Well, okay, I've got a little beef with that. That's not a quality of decentralized exchanges. That's just the fact that there's not many people using them yet, and so that's why there's a lack of liquidity. That has nothing to do with the fact that it's decentralized in nature, in and of itself. Anyway, I'll go on with the article. In the interview, Buterin cited one example to demonstrate the advantages of the current decentralization of Ethereum. Quote, "If someone puts a gun to his head and tells him to write a hard fork patch, he would definitely do so. However, relatively few users would then download and run the update. And that, according to Buterin, is called decentralization. The degree of decentralization of Ethereum itself has been put in question by some experts who cite, for example, the possibility of collusion between mining pools to manipulate the network. As of press time, Ethereum is the second largest cryptocurrency with a market capitalization of $47.5 billion. Yes, well, I thought that was... that's a really nice quote. I hope they burn in hell. Well, I agree with Vitalik on that, for sure. I'm not... I use some centralized exchanges because in some cases I have to. There's some decentralized exchanges are okay in volume, but others are not, and you really have to go to where the liquidity is. And it would be nice if more people would turn to decentralized exchanges and really help with their liquidity problem. And heck, save a lot of money in the process because you're not feeding all that coin to some particular company. That I've read, I think this past week somewhere that Binance had over $1 billion or is anticipating $1 billion profit. That's net. Net, people, that's not gross. $1 billion net profit. Where are they getting that? No, it's the exchange fees, isn't it? For the most part, I reckon. And other services they're running. That's huge. And that's just one centralized exchange. There's heaps of them. Our next article, Malta, crypto exchange Binance backs plans to create first decentralized tokenized bank. The world's second largest crypto exchange, Binance, is backing plans to create a blockchain-based bank with tokenized ownership, Bloomberg reported today, July 12th. The future Founders Bank would be owned by digital token investors and be based in Malta, known for its robust and transparent crypto regulatory climate. According to Bloomberg, Binance has already invested a 5% stake, along with other anchor investors, at a $155 million pre-money valuation. The project seeks to become the world's first decentralized, community-owned bank. Not sure how it could be decentralized in this case, but whatever. The owners of the future bank will be issued with legally binding equity tokens in return for their investment via the blockchain-based equity fundraising platform NewFund. As Bloomberg notes, before launching operations, the bank will need to seek a license from Maltese regulators in accordance with EU financial laws. Silvio Schembri, a junior minister within the office of the Prime Minister of Malta, has reportedly said that the island, quote, is honored to be chosen as the location of the first global community-owned bank. As Cointelegraph reported last month, the Maltese Parliament has just recently approved 3 distributed ledger technology and crypto-related bills, consolidating the island's bid to remain at the forefront of blockchain innovation. Binance first announced it was relocating its headquarters to Malta in March, last month revealing that the exchange had already set up a bank account on the island. Ahead of today's revelations, Binance has recently made its first foray into crypto fiat trading, unveiling a new platform, Binance Uganda, which supports the Ugandan shilling alongside major cryptocurrencies. According to CoinMarketCap, as the second largest exchange globally, Binance has seen 923.3 million in trades over the past 24 hours at press time. I think that's really interesting. Global community bank, I don't know about decentralized, but if it's on the blockchain and also has standard kind of banking tools, like the ability to issue Visa and MasterCard sort of thing, and links into the regular banking system, that could be really huge. It could be a game-changing thing. All right, let's go on to the next article. Litecoin Foundation and TokenPay acquire stake in a German bank. TokenPay Swiss AG has officially confirmed that it has acquired a 9.9% stake in WEG Bank AG in partnership with the Litecoin Foundation. The terms of the agreement will also include options to purchase approximately 90% overall of the bank, pending the customary regulatory approval. TokenPay has revealed that a strategic partnership between it and the Litecoin Foundation has seen the entities acquire an approximately 10% stake in German financial institution. So, let's see. The deal will see WEG Bank provide its world-class technology and marketing expertise to TokenPay and its several blockchain initiatives, specifically citing TPay cryptocurrency, EFN decentralized exchange, EFN. That doesn't quite sound right when I read it out. Token Swiss, asset management, WEG Bank fintech platform, and multi-signature transaction engine. The managing director of the Litecoin Foundation, Charlie Lee, praised the partnership, stating, quote, "This partnership is a huge win-win for both Litecoin and TokenPay. I'm looking forward to integrating Litecoin with the WEG Bank AG and all the various services it has to offer to make it simple for anyone to buy and use Litecoin. I'm also excited about Litecoin's support in TokenPay's EFN decentralized exchange." Oh, dear. Mr. Jörg E. Wilhelm, the head of the supervisory board of TokenPay Swiss AG, stated, quote, "We are elated to be in the process of acquiring a large stake in a successful business bank based in Germany, such as WEG. Our ecosystem consisting of the TPay blockchain, WEG Bank, and Token Swiss and Litecoin Foundation provides us with a tremendous opportunity regarding merchant solutions, along with strong and diverse customer base for our crypto debit card business. The tangible reality of bridging the gap between the old and new world is electrifying." And so on to say, deal may see acquisition of 90% of WEG. Terms of the agreement will also include options to purchase approximately 90% overall of the bank, pending the customary regulatory approval. The release adds that under German banking law, no entity can own more than 9.9% of a bank without regulatory approval. I guess that explains why they just have that initial 9.9% investment. TokenPay, quote, plans to exercise its options to acquire the remaining shares of WEG Bank it is entitled to purchase should approval for such be granted. Matthias van Hoff, founder and CEO of WEG Bank AG, stated, quote, "The partnership with innovative institutions such as TokenPay and Litecoin might at first come unexpectedly for a very conservative institution like us, but we have thoroughly and diligently examined the prospects of a common future, and we became convinced that the future of banking will make adoption of such modern payment methods inevitable. We are therefore proud to have teamed up with the best in the field." I mean, wow, that's, I guess this shouldn't be unexpected, this sort of thing, but we've had a lot of groups trying to integrate mainstream banking with coins for a while, and it seems like it's really starting to manifest. I mean, I can see that in another year we're going to have more of these sort of deals. So this is just going to be the tip of the iceberg, where a lot of crypto organizations are going to, crypto-related organizations as well, are going to start buying into the banks. They've got a lot of capital, many of them do, and we just read the article, the past one there, that Binance is working to create a bank, from scratch. So I think the existing banks are going to eventually see the writing on the wall, and they're going to have no choice. Either they're going to die out, or they're going to join with crypto, and it's going to become a combined effort to market to the masses all the services that a bank could offer if it had access to the crypto side of things. Our next article, top there. Switzerland's main stock exchange dives deep into crypto. Switzerland's principal stock exchange has announced that it is building a platform for the trading, settlement, and custody of digital assets. This announcement follows reports of government officials working on giving crypto businesses access to banking services. So it's called SIX. So that's the operator of Switzerland's principal stock exchange, the SIX Swiss Exchange, announced Friday that it, quote, is building a fully integrated trading, settlement, and custody infrastructure for digital assets. The SIX exchange is fully regulated by Swiss authorities, the Swiss Financial Market Supervisory Authority, FINMA, and the Swiss National Bank as a financial market infrastructure operator. The company plans for its new platform called the Swiss Digital Exchange to, quote, enjoy the same standard of oversight and regulation, end quote. Citing that SDX, that's the Swiss Digital Exchange, will bridge, quote, the gap between traditional financial services and digital communities, the company claims. SIX CEO Josh Disjesselhoff, maybe the J is not pronounced. He commented, quote, this is the beginning of a new era for capital markets infrastructures. For us, it is abundantly clear that much of what is going on in the digital space is here to stay and will define the future of our industry. Will the platform trade Bitcoin directly? While the official announcement by SIX does not mention whether the platform will support the direct trading of cryptocurrencies, a few publications indicated that it will trade Bitcoin and other cryptocurrencies. Business Insider wrote, quote, SIX's new platform set to launch in the first half of next year will offer end-to-end trading, settlement, and custody service. We've been hearing a lot of different exchanges, more mainstream exchanges, not crypto exchanges, complaining about custody being a big problem. So I like to see when they mention custody service. That's going to be pretty crucial, I think, for mainstream adoption. So they're going to offer custody service for digital assets such as Bitcoin and ICO tokens, end quote. The Financial Times wrote, quote, the platform being built by the SIX exchange is designed to be used for cryptocurrencies such as Bitcoin and will be based mainly on blockchain distributed ledger technology. However, SIX clarified in a tweet, quote, first we will enable the tokenization of bankable assets like stocks or bonds and potentially at a later stage non-bankable assets. Whether we will also make cryptocurrencies such as Bitcoin or existing ICO tokens available is still open. So it's not perfectly clear what they're doing, but I reckon, it's really kind of clear what they're doing in the end, because they wouldn't have any reason, really, I think, to go this route unless they were serious about really putting everything on the table. Our next article, Australia, crypto exchange bitcoin.com.au appoints ex-executive of accounting giant PwC as CEO. Australian cryptocurrency exchange bitcoin.com.au has appointed former consulting giant PricewaterhouseCoopers executive Ben Ingram as its new CEO, Business Insider Australia reported on July 12th. Ingram held the role of director in charge of digital strategy at Big Four auditor PwC, leaving the company in March of this year. Business Insider Australia writes that Ingram's work at bitcoin.com.au will include both improving the exchange's trading functionality and focusing on expanding crypto-based financial products into the traditional market space. Ingram specifically mentioned instituting crypto investment products into areas like superannuation, which is a company-created organizational pension plan for employees. He also noted that the emergence of crypto-focused funds could, quote, perhaps be a hedge against poorly managed central bank currencies. Ingram told Business Insider Australia that Bitcoin.com.au can be considered more of a gateway service than a full crypto exchange, as it provides same-day settlements, letting people get into Bitcoin and, importantly, get back out of Bitcoin. They currently offer transactions in Bitcoin and Ethereum, having added Ethereum in March, though Ingram noted the firm would like to add other cryptocurrencies in the future. He also voiced his personal interest in the technology behind cryptocurrency, telling Business Insider that the, quote, core premise of distributed ledger technology has very obvious widespread appeal. Even if the tech capabilities at present aren't very capable, I think humans will prevail. Continuing, quote, we know this tech doesn't have a dead end. While the evolutionary path hasn't been fully determined, I think there's enough evidence that there is a path. Ingram isn't the first Wall Street exec to join the crypto sphere, as an apparent exodus from traditional financial markets into crypto has been ongoing since this spring. In March, Bitcoin.com.au made buying Bitcoin and Ethereum for fiat possible at 1,200 newsstands across Australia. Australia, which ended the practice of double taxation of cryptocurrencies in July 2017, is considered by some to be a growing cryptocurrency hub. The government recently signed a $740 million deal with IBM to use blockchain and other new technologies to improve data security. So again, more executives leaving the more mainstream area of finance and moving into the crypto sphere, and presumably bringing contacts with them, bringing more people with them, and, you know, just the beginning of the end of the mainstream traditional financial sphere, and pulling in the crypto industry, which will eventually, really, I believe, absorb the entire mainstream financial sector. That to me is the end outcome. How existing cryptocurrencies fare during that transition is up for debate, but clearly the traditional financial sphere is going to be pulled in, sucked in, and absorbed and eaten whole by blockchain and related technology. Oh, that's weird. I wonder why that tab was suspended. Let's open that again. Our next article, Ripple adds former Facebook executive as new senior VP of Business and Corporate Development. So along the same lines, although this guy is maybe not so much a financial guy, Ripple, the company behind the third largest cryptocurrency by market cap, has recently employed Kahina Van Dyke as the new Senior Vice President of Business and Corporate Development, according to an official statement on July the 11th. At the new position, Van Dyke will be responsible for providing Ripple with strategic partnerships for international financial services, focusing on the development of, quote, a new global technology solution for international payments, end quote. Van Dyke has joined Ripple to, quote, eliminate the friction in cross-border payments, end quote, by establishing partnerships and applying technology to change an industry, she said in the press release. When asked what is the, quote, the most challenging issue in payments today, end quote, Van Dyke noted the outdated system of cross-border transactions, claiming that it is one of the most complex and multifaceted problems in payments. Van Dyke said that the current global payment system, which was built almost 40 years ago, no longer meets the real-time needs of business today. Van Dyke stressed the necessity to provide companies as well as individuals with a way of transacting small and large amounts of money faster and at lower cost, stating that the system should be more nimble and transparent than the one developed for large corporate transactions decades past. With more than 20 years of experience in banking and fintech, well, I guess I was wrong. I thought they were more of a operations person, but yeah, okay, so Van Dyke does come from a financial background. Van Dyke has held prominent positions at MasterCard and Facebook. According to her LinkedIn profile, Van Dyke served as Global Director of Financial Services and Payment Partnerships at Facebook for more than 2 years, developing new payment solutions and financial services. While working at Facebook, Van Dyke managed partnerships with such major companies as Citibank, PayPal, Visa, Western Union, and others, having provided financial solutions for more than 50 countries. Previously in June, Ripple chief cryptographer David Schwartz claimed that banks are unlikely to deploy the crypto's underlying technology of blockchain to process international payments, citing low scalability and privacy problems. So, in other words, they're going to hire out and use things like Ripple. I guess that's what he's trying to say. Earlier this week, a joint study by Imperial College and UK trading platform eToro stated that cryptocurrencies like Bitcoin have potential to become a mainstream means of payment, particularly because of their ability to improve the cross-border payment system. Well, again, another big executive moving over, and, of course, there's been rumors that Facebook wants to integrate their own currency at some point down the track. So there you go. I think this is more down that track. Okay, I've got a rogue plugin here doing bad things. What? Blocking my tabs here. So our next news article: Opera web browser becomes first major web browser to include native crypto wallet. The Opera web browser. I used to use Opera all the time. I really used to like it. They kept changing things pretty radically in it, though, and I got a bit frustrated with it and moved on to Firefox, and then I moved on to Chrome. I don't know. I don't like any of them, really. I'm waiting for that MAIDSAFE safe network browser. That's what I want. So, back to the article. The Opera web browser for Android is launching a private beta version that will include a built-in crypto wallet, according to a press release shared with Cointelegraph Wednesday, July the 11th. Opera has already entered the crypto sphere, as both their web and mobile browsers have included anti-crypto jacking software since January. Opera's crypto wallet will support Ethereum Web3 API and will be integrated with a default web view on top. The press release notes that the wallet will automatically add tokens and collectibles into the wallet. Product manager Charles Hamel noted that by becoming the first major browser to open up to Web 3.0, Opera is making the Internet of the future more accessible. Quote, "Our hope is that this will accelerate the transition of cryptocurrencies from speculation and investment to being used for actual payments and transactions in our users' daily lives." Opera launched their Android Opera mini browser in 2015 with the intention of growing its user base to 250 million by 2017. According to data from June 2018 on Wikipedia, Opera has a 3.5% usage share for all browsers globally and a 4.5% usage share for mobile browsers globally. Opera Mini has 0.5% share of tablet browsers worldwide. Well, those percentages don't sound like much, but a user base of 250 million is pretty significant. So, and a lot of those people probably have never used crypto before. So having that capability built into a browser sounds pretty huge. And if Opera has traditionally been one on the forefront of features for browsers. A lot of browsers later on have copied what Opera has done. I mean, even having multiple tabs and different things. I think Opera was one of the first way back when. So Opera is really a trendsetter among browsers, and if we could see, later down the track, Firefox and then Chrome starting to do this sort of thing, it could be a really huge game changer. Really huge. Our last article for this week. Less than half of ICOs survive 4 months after sale, study finds. New academic research has concluded that more than 50% of crypto projects raising capital through ICOs do not make it through to the 5th month after the token sale. This study also suggests that investors get the best return on their money if they sell the coins within the first month of trading, while the safest strategy would be to part with the tokens on the very first day. The majority of ICOs live less than 120 days, despite data from 2 recent studies suggesting that investors are still bullish on ICOs. A research conducted by Boston College academics reveals that most crypto startups relying on crowdfunding have a pretty short lifespan. According to the authors, Hugo Benedetti, assistant professor at the Carroll School of Management and Finance, PhD student Leonard Kostovetsky, less than half of all new ICOs survive more than 4 months after launch. The 2 researchers based their study on analytics of the Twitter accounts maintained by the project. Taking into account the intensity of the tweets after the coin offering, they estimated that the survival rate of the startups 120 days after the end of the sale was only 44.2%. The assumption is that companies that are inactive on social media in the 5th month most probably did not survive. Well, I don't know about that. It really depends on how big of a company it is. The report covers almost 2,400 ICOs completed before May this year and examines over 1,000 Twitter accounts. The survival rate has been calculated as an average figure for 3 categories of ICOs. Business Insider reports. The first group consists of projects that have not reported raising any money and are not listed on exchanges. Startups that have reported raising capital but did not list fell in the second category. And the third includes the ICOs that list their coins on trading platforms. The statistics show the following survival rates: 17%, 48%, and 83% for these groups respectively. The share of the projects that became inactive right after their token sales or the potential scams is about 11%. Listing increases chances of survival. Yeah, of course, we just solved the numbers I read out. Based on these findings, the study concludes that the sustainability of an ICO depends on whether the company behind it is able to list its coin on a crypto exchange. Investors who have supported a project during the coin offering enjoy greatest returns when the coin is listed. The researchers gathered data for over 4,000 ICOs, which raised $12 billion, a total of $12 billion, I guess, since January of 2017, and found that the projects generated an average return of 179% accrued over an average holding period of 16 days from the last day of the ICO. According to Kostovetsky, selling the acquired coins on the first day of trading is the safest investment strategy when it comes to ICOs. In any case, investors should sell their holdings within 6 months. Quote, what we find is that once you go beyond 3 months, at most 6 months, they don't outperform other cryptocurrencies. Kostovetsky told Bloomberg, quote, the strongest return is actually in the first month, he emphasized. Benedetti and Kostovetsky explained the spike in the prices of many tokens after their listing with the underpricing during the ICO, as often they are sold to investors at significantly discounted prices compared to the open market rates. Despite that, the researchers also found that the returns are declining over time as companies have started analyzing prior sales by similar platforms to better determine the expected demand and price of their coins. Yes, I'm not surprised by this. I don't know exactly how many of these are actually failed companies. Certainly you could say that the value of their token is diminished greatly. Maybe they're really less than half. Maybe some of them are just busy coding and struggling to survive and don't have time to update the Twitter feed as well. So that's also possible. Certainly, though, getting listed really helps the value of a coin. I think for me, this really stresses the importance of knowing the team behind the project. Before you get involved, really dig in and learn about who they are. Make sure they're a real company, and they've got, real company is a bit vague. I guess, check them out as much as you can. Do they have employees? Are they working together as their team? What's their history? What have they done in the past? Really dig in, because if you're going to invest in something, even if it's for a few months, it's important to know what's going on, and I just think that's really important. Okay, well, folks, that's all I have for today. I'd like to thank our viewers for joining me. I hope you found the episode informative and helpful. Please subscribe, like, comment, and share video with others. And tune in next week for another interesting episode. Bye-bye.